it's a small project, but it's a very good grade in terms of what we've got there. The resource is about 45,000 ounces. As Ian said, we've done the range at 3,000 to 3,800, and that came up between $9 and $19.6 million. So that's wonderful. So it is driven by grade, and you can see there, even with a 20% dilution on the scoping study, you got a grade of 2.43 or over 2 grams, even with the bigger pit as well. I think that's important because it allows you to track it further as well, especially as these gold prices are reasonably high. So what it takes is, these cash flows are basically over 18 months and non-discounted, so it's just a straight cash flow. There's no point discounting it over 18 months. So you've got about a startup cost of up to $1.5 million. So that's that outlay. To be honest, it was even double that. You're still looking at easy money, and you can take that risk. So I think that is really important to know. At $3,800, you've got 15,900 ounces in the pit. Do the math at 4,500, that's $700 above that, the scoping study price. So obviously you'd need to re-optimize, you'd need to do a lot of other things to maximize your pit, but that's just a potential difference of about $11 million in an opportunity value. That's what I'd say. Obviously, you can't put it as a scoping study terms, but that's the value that we can actually attribute to just the cash component of the gold price increase. We did the study when it was sitting around about that $3,400 mark. That was our base case. And we've seen that price move substantially in the last 3 to 4 months. And I suppose, is it going to stay there? And that's a really good question, but I think the uncertainty in the markets is driven by politics, a lot of it, and maybe another 4 years of a US president will keep the market on its toes. So I think gold may be a safe haven for quite a while still yet, and I think that's really where we need to be playing and get this monetize this resource through that time. The pit is reasonably easy. We're looking for a toll treatment scenario, so it's narrow, high-grade gold. There's some really fantastic hits in there, lots of visible gold. So it is one of those pits. Once we get down there, we'll basically, because you're shipping it off, you don't need to worry about all the tailings dams. So we're going to start the environmentals process. We're going to appoint talking to mining engineers about starting the works approval process and the mine planning, doing some grade control and doing some extensional drilling as well, to firm up those early kind of cash flow months. And actually, really, we're going from a scoping study straight into a really small feasibility and pushing it along. And I suppose we're still looking at other opportunities. We're still looking at appointing a mining contractor. We'll look at profit shares, and we'll look at lots of different things to get this going and what's best for our shareholders instead of diluting or bringing the project forward with different capabilities. So I think we're open to quite a few things there, but most importantly is we're moving forward with it to capitalize on this increased gold market. The targets are interesting. As I said, there is 45,000 ounces in the JORC resource there. 15,900 come into that pit at 3,800. That could be more if we optimize it at 4.5, obviously. But there's huge areas that have been identified to the north. So I think when we go up and do that grade control infill drilling, we will probably step out and do a couple of other lines and see if we can actually increase that shallow pit scenario slightly to the north. That's our priority 1 target there. It was quite interesting. This was done by a really good structural geologist, and he actually pointed to the model where we hit it first prior to our first lot of drilling, and he's come back after that and identified further areas. So from a geological point of view, it's a duplex system, and you've got these repeats from these thrusts. So it is so really good potential that we can hit some more stuff out there as well. So just in summary, we've done the scoping study. We're going to go to a feasibility. We're going to push on to environmentals and the works approvals and grade control, basically drilling. We're still looking for how best to monetize it for our shareholders, be it an outright sale, a JV profit share, or just a management contract to come in and manage our side to get this operation underway. And there is exploration potential to grow this, but it's not going to be 1 million ounces, but it could easily double, we think, in the short term. So that's where we're at.